Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The dollar and US futures slide, while stocks in Asia gain as markets react to the US Supreme Court striking down a key part of Donald Trump's tariff policy. The US president puts forward a new 15% global tariff. We'll assess the winners and losers. Plus, talks on Iran's nuclear program set to resume in Geneva this week. Donald Trump says he's still considering a military strike. Well, a very good morning. Welcome to a new week. And the market reaction to that US Supreme Court ruling and President Trump's move in response continues this morning. We have US futures sliding even further into the red. The dollar battered against its major peers. Take the Swiss franc, the yen, the euro, you name it. The Bloomberg Dollar Spot Index down 0.2%. We can't talk about cash trade in treasuries because there isn't any at the moment because Japan is on holiday. That'll get started at 7 a.m. London time. But take a look at gold, up nearly 1% at $5,158 an ounce on the trade uncertainty and the geopolitical uncertainty as well. What are the risk events on the agenda for today? Let's take a look. We've got the latest German IFO data coming at 9 a.m. London time. That should give us an indication of whether this recovery in Germany is actually real. And then we'll be on the lookout for some Fed speak from Governor Chris Waller and the ECB President Christine Lagarde. She's already been speaking to CBS's Face the Nation over the weekend, saying that President Trump's latest tariff moves risk upsetting the equilibrium that was negotiated between Brussels and Washington last year in Turnberry here in the UK. And then we also have EU foreign ministers meeting in Brussels, this to discuss the latest on the war in Ukraine, as tomorrow we'll see 4 years of that conflict. Plenty on the agenda. Let's set you up for the day ahead. We begin with President Trump saying he's boosting the 10% tariff rate on all global trading partners, announced on Friday, to 15%. The US is telling partners to honour their bilateral trade agreements despite fresh confusion following the Supreme Court ruling against President Trump's so-called reciprocal tariffs.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays out. I'm in active conversation with them on it.
In response, the EU warns it may freeze ratification of its deal. Meanwhile, Bloomberg understands that Indian officials are postponing talks to finalise their pact with the US. So to bring it all together, Bloomberg politics editor Laura Davison joins us now for more. Laura, good morning. Do we know when this 15% tariff is going to kick in and what the latest is really on the refunds?
Yeah, so this 15% tariff will go into effect on Tuesday. The U.S. has already started all the legal preparations to pull back those global tariffs that were kind of country by country based, and that across the board 15 tariff will go into place on Tuesday. Important to note that this is a short-term tariff. This only lasts for 150 days, really just about 5 months into the summer. And so that, at some point will expire. And that leaves a lot of questions for all the various trading partners of, is it worth trying to continue these negotiations, or is it worth just taking a pause, trying to figure out exactly what the long-term strategy may be. Remember, this is just for those kind of across-the-board country-by-country tariffs. There's also sectoral tariffs, things on steel and aluminum, auto parts, other specific goods, chips, for example. Those still stay in place, and the Trump administration may use that same authority, tapping things like national security concerns or unfair trade practices to impose more tariffs in the coming weeks and months.
And Laura, who are the biggest winners and losers of all these tariff changes?
Yeah, so the biggest winners and losers depend on what your tariff rate was before. So if you were lower than 15%, so for example, Australia and the UK, they had a 10% rate. They are now getting a essentially 50% increase up to 15%. Some of the big winners, though, are some of the sort of the biggest trading partners in Asia, particularly China, as well as India. Brazil also getting a nice deal here. This is causing a lot of confusion and uncertainty because a lot of these trade deals that were negotiated were sort of, as countries were negotiating them, they were looking at, kind of how is my rate relative to my neighbors and kind of peers that I see as key, trading adversaries. So there was a lot of sort of different maneuvering there. That's all null and void. That 15% is for everyone now, which means that all the other portions of these bilateral trading deals, which included things like certain exemptions from tariffs or investment pledges, those are all really called into question as everyone sort of redoes the math, reevaluates, what this means going forward, and what the Trump administration can sustain given this legal challenge.
Yeah, if you were the UK, you'd be thinking, really, did it pay to be at the front of the queue? I wonder if they'll get an exemption from President Trump. Anyway, Bloomberg Politics editor Laura Davison, thank you so much for that update. And let's turn now to the market reaction. The dollar and US futures slipping on the back of that Supreme Court ruling and President Trump's response. Let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive for more. Ven, Japan and China notably are on holiday today, but what stands out to you from the market reaction so far this morning?
I think what stands out this morning is the reaction in gold and silver that we have seen. Gold is facing renewed buoyancy because of obviously the threat in Middle East and what it might mean for a search for havens. So I think that havens are likely to be bid this week. I mean, if you've seen gold, Lizzie, it's surged 6% in just the past 4 sessions. So it's got short-term momentum working in its favor. And depending whether or not US strikes Iran, and how protracted any conflict proves to be, and how widespread it is, if there is a strike, I think those will determine how long this buoyancy in gold continues. Keep in mind, Lizzie, that this buoyancy in gold comes at a time when the dollar is already on the back foot because of the tariff setback to Trump. So I think that, the short-term augury for gold in all this is that it's going to faces buoyancy, probably going to revisiting its peak set just last month.
And the dollar on the back foot, as you say, Ven, along with lots of other currencies, the euro gaining, therefore. Is that going to last?
Yes, I think that the euro's ascendancy is going to last simply because, just before we saw some very curious data coming out just before the Supreme Court ruling. One was that, the US trade deficit ballooned to the widest since the 1960s last year, for the whole of last year, i.e. the trade tariffs that Trump brought in did nothing to quell the deficit. In fact, the deficit widened considerably. The other factor that works in favor of the euro is the current account data that was released on Friday, again before the Supreme Court ruling. And that showed that the current account surplus for the Eurozone widened almost twice in December. So that shows that the natural inflows are into the Eurozone. So that is going to augur well for the euro in the long term. I think that we maybe hit some profit taking if there is a skirmish over the weekend, but that apart, the lay of the land looks pretty clear for the euro.
And of course, we'll keep an eye on euro dollar as we get that EFO data at 9 a.m. London time. Ben, for now, thank you so much. That's Ben Ram, Bloomberg MLive cross-asset strategist. Now, from trade to geopolitics, US President Donald Trump says that he's considering limited military strikes to pressure Iran into signing a new nuclear deal. Oil fell as investors weighed the odds of a new nuclear deal between the US and Iran, with more negotiations on the issue expected later this week as American forces mass in the Middle East. Joining us now for more is Bloomberg's Horizons Middle East and Africa anchor Germana Basecci. Morning, Jew. Look, how far apart are US and Iranian officials in these talks for a deal on Iran's nuclear program now? It seems from oil that traders are getting optimistic. Good morning.
Good morning. Well, they're still very far apart. It's tough to say that any progress has been made over the course of the weekend. But one thing that is new is the Iranian Foreign Minister Abbas Araghchi, in an interview with CBS News, did seem to suggest that the Iranian side are willing to engage in negotiations with the U.S. as soon as Thursday, this coming Thursday in Geneva. And indeed, we know that this is perhaps something that the president's son-in-law, Jared Kushner, and Steve Witkoff have been pushing for as well. The real possibility of exploring all diplomatic options before a military attack is on the table. Now, a military attack is most definitely on the table, as we've been reporting the last couple of weeks, with that massive buildup in the region, the likes of which not seen since prior to the Iraq war in 2003. So it eclipses even that of the military buildup we saw prior to the Iran-Israel war last June. And so all this signals suggest that the U.S. is actually preparing itself for a military strike. And under what form that could take. Reports of the weekend, the New York Times suggesting that maybe one thing that the U.S. could do, and again, this is speculation at this point, is going for a limited military strike in order to bring Iran even closer to negotiating along the U.S.'s terms and offering more concessions. After which, if Iran don't concede, then they could be looking at something like a more protracted and long-term military operation. But some question marks there, and not least because it's unclear at this point what exactly the U.S.'s objectives are, whether it's inflicting more damage on military sites, on nuclear sites, or on actual full regime change, in which case, you're looking at something with unforeseen consequences in the region, which is why the decision has been such a difficult one for them to make. I would also just add, Lizzie, that around 2/3 of the American public are against the idea of a protracted military operation in Iran. So still a lot of things that the Trump administration need to consider ahead of making that decision of whether to strike or not strike.
And of those two scenarios that you set out, Germana, where does it leave the Strait of Hormuz, which of course is the focus for markets?
Yeah, I think the big focus on whether or not this action happens in the next week is going to be exactly how Iran retaliates. So the U.S. could go for that limited military action. They could choose to target weapons depots. They could target more of those nuclear sites or go after regime personnel, which is what we saw happen in the Iran-Israel war last year, at least from the Israeli side. But then how Iran responds is going to be key here. And Iran know that they have a stronghold over this crucial choke point, the Strait of Hormuz, that could massively impact the flow of trade of a seaborne oil. As we were speaking about last week, about 20 to 25% of daily oil passes through the Strait of Hormuz. But beyond that, they could also retaliate on assets in Gulf nations. And we know that the U.S. have their military bases. Last year, there was that telegraphed attack on the Al Udeid base in Qatar. And for sure, Gulf nations do not want to see a repeat of that happening. Back in 2019, we also saw attacks on Saudi Aramco facilities in Abqaiq, which is why since then you have seen these Gulf nations try to sort of mend relations with Iran to ensure that they themselves will not be targets should things really kick off. And then the other option, of course, is that perhaps terror cells around the world, we're talking about, in Europe, potentially could be activated as well. So again, we need to be on high alert for the Iranian response to a potential U.S. attack.
Germana, really appreciate the analysis. That's Bloomberg Horizons Middle East and Africa anchor Germana Basecci, who of course will be back on Horizons at 5 a.m. London time tomorrow. Well, still ahead, tariff uncertainty dominates the day ahead. We'll gauge the likely market reaction with Muzinich's co-head of public markets. That's at 6:30 a.m. London time. But first, we'll be talking about the legal basis for President Trump's continuing of his tariff agenda after that Supreme Court ruling. Janet Whittaker from global law firm Clifford joins us next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. President Trump is scrambling to preserve his trade agenda after the US Supreme Court ruled against his use of emergency powers to impose tariffs. His policies are set to be subjected to fresh legal challenges. This as he prepares to face lawmakers when delivering the State of the Union address tomorrow. I'm pleased to say joining me now is Clifford Senior International Arbitration and Disputes Partner Janet Whittaker. Janet, appreciate you staying up late for us in Washington. Really good to get your analysis. What I'm wondering, and I've just had an IB from a viewer asking this very question, is when President Trump's Plan B expires in 150 days, why doesn't he just wait a day and do that again for another 150 days? Can he, if he could get congressional approval?
That's a great question. It's great to be here. So Article 120, Section 122 of the Trade Act of 1974 is quite specific. It enables the president to impose tariffs to deal with balance of payment deficits, but it has a very strict time limit of 150 days. And after those 150 days, which expire in July, he would have to go to Congress to get approval, and otherwise he will have to use other tariff authorities in order to continue his tariff agenda.
Well, if we go down the list that is on screen at the moment, what about Section 338 of the 1930 Smoot-Hawley Tariff Act? From your legal perspective, Janet, would that stand up legally in 2026?
So Section 338 is a provision that has never previously been used to impose tariffs. It does allow the president, on a finding that another country's trade measures discriminate against US trade, to actually impose tariffs of up to 50% on that country. It is an unused provision, which means that it is possible that if he were to implement this and impose tariffs using this provision, that we would see yet another legal challenge to his tariffs. Some of the other authorities that you had on your list are tariffs that are more tried and tested. So, for example, Section 232 on the sectoral tariffs, or Section 301, which really deals with unfair trade practices. These provisions have been used by President Trump both in his first term and also in this second term in order to impose tariffs. And the administration, various officials have already indicated that we're likely to see either an expansion of existing investigations or new investigations being launched.
And we were just discussing with our reporter Laura Davison that the UK seems to be one of the biggest losers here from all these tariff changes over the weekend. What do you see as the chance that President Trump would grant an exemption to the UK from this new 15% tariff?
I think one of the things to keep in mind about this new 15% tariff is that we haven't yet seen how the administration is going to implement it. So on Friday night, the White House issued a proclamation in relation to those 10% tariffs. And then on Saturday morning, President Trump then said on social media that they are going to increase to 15%. So, there is a bit of waiting and seeing here what happens when that 15% tariff is actually formally implemented. And we will see at that point whether there are any special provisions for countries such as the UK or Australia, which actually had negotiated lower rates as part of their trade agreements with the United States. So I think there is a question around what comes next when we actually see that piece of, that particular rate being implemented here.
And the Supreme Court didn't offer much clarity on refunds, but of course that is a massive question when it comes to US businesses, the net economic impact of the Supreme Court ruling. What do you expect how do you expect refunds to be handled?
So with $130 billion at stake, and maybe even more than that at this point, it's a really important question for importers who have paid IEEPA tariffs over the past almost 12 months. The court, as you say, was silent on this issue. And so the likelihood is that this issue will go back to the lower court, the US Court of International Trade, to determine whether these refunds are available, and if so, the really important questions of how and when they will become available. Hundreds of companies have already filed claims before the Court of International Trade seeking refunds. Those cases are all suspended pending the Supreme Court's decision. So now we'll wait to see what the Court of International Trade does with those, whether it establishes some form of consolidated procedure in order to navigate it. The other possibility is that either Congress or the administration could actually put in place some form of administrative mechanism for dealing with the millions of tariff entries that have been made in relation to IEEPA tariffs. But so far, the indications from the administration are that there may be litigation before we get to that point.
OK, Janet, appreciate you staying up late for us. Out of Washington, that is Clifford Chan, Senior International Arbitration and Disputes Partner. Janet Whittaker, thank you. Well, coming up, the EU works on changes to its carbon pricing mechanism. We'll have more on what it could mean for corporate bottom lines. That's next. This is Bloomberg. Pricing carbon is a key tool in European attempts to cut emissions from industry, but it adds to companies' costs, potentially damaging their competitiveness. EU officials have been working on changes that would ease the impact, triggering a seesawing carbon price. Emma Coker, head of carbon market research at Bloomberg NEF, joins us now to discuss where all of this is going. Emma, good to have you. So the EU's carbon markets kicked off 2026 with a bang. You've seen prices tumbling. What's been going on, and really what do these reforms include to anyone who's just finding out about all this?
Sure. So we're seeing politics really drive volatility. And so the EU is prepping a new set of reforms, and this could include things like the incorporation of international aviation, the waste sector, and even carbon removal credits. Now, this has triggered speculation over what could change. And what we saw, and as you can see on this chart, is prices dipped on February 16 to 69 euros per metric tonne, reflecting concerns that the scheme could itself be softened, and actually we could see increased supply. But taken at the same time, we're seeing an overarching review reassessing the fundamental parameters of the scheme. And so actually we think in combination there will be a structural bullishness, but in the near term we are likely to see volatility as these reforms are debated.
Yeah, but what makes these reforms different?
So we're in a structurally higher price environment. So BNEF expects the carbon price to average 87 euros per metric tonne this year, and this could climb even to as high as 185 euros per tonne by 2035 if the scheme was to remain the same. This is because cheaper abatement options, particularly those in the power sector, have largely been exhausted. So what this means is the next set of emissions cuts will be more expensive and harder. But if the EU is serious about their climate targets, higher carbon prices are part of this story. And we think that actually to steady the course of decarbonisation, this is a fundamental necessity.
Well, you would also hope that they're serious about economic competitiveness. So how do EU officials balance the two?
We have seen this balancing act before. The EU negotiated its Fit for 55 package at the same time as its REPowerEU package. Now, at that time, we saw the EU tighten climate ambition, effectively ramping up its carbon market. But what it did provide was near-term measures to cushion the impact for industrials and households. So we could see a very similar approach, whereby the EU reaffirms its climate goals, but actually it also provides near-term measures in order to support industrials. What that means, again, is we are likely to see near-term volatility, but actually, again, that structural bullishness should be embedded.
OK. Emma, thank you so much. That's Emma Coker, head of carbon market research at Bloomberg NEF, and you can find all of those charts on the terminal. Well, now to some other top stories we're following for you this morning. More than 35 million people across New York City and the US Northeast are under blizzard warnings as a huge winter storm is forecast to bring up to 24 inches of snow. Schools are closed and streets and highways and bridges will be shut to most traffic from 9 p.m. on Sunday night until noon on Monday local time. Meanwhile, Mexican authorities have killed a top drug cartel leader in a military raid in the western state of Jalisco. The government says the leader of Jalisco New Generation, known as El Mencho, was killed along with 6 cartel members. US officials celebrated the killing, which comes with Mexico under increasing pressure from President Trump to halt the flow of illegal drugs into the US. And the US Secret Service says an armed man was shot and killed after entering a secure area of the president's Mar-a-Lago estate. Agents say the man was carrying what looked like a shotgun and a fuel can. President Trump was in Washington at the time of the incident. Coming up, the latest market moves off the back of those tariff announcements with Tatjana at Greil Castro. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The dollar and US futures slide while stocks in Asia gain as markets react to the US Supreme Court striking down a key part of Donald Trump's tariff policy. Meanwhile, the US president puts forward a new 15% global tariff. We'll assess the winners and the losers. Plus, talks on Iran's nuclear program set to resume in Geneva this week. Donald Trump says he's still considering a military strike. Well, a very good morning if you're just joining us. It's 6:30 a.m. here in London, and here's the picture in markets. Those moves that we saw off the back of the US Supreme Court ruling on President Trump's tariffs on Friday continuing in today's session. So futures are plummeting stateside, down 0.7%. The Bloomberg Dollar Spot Index is also weaker. You've got the dollar down against the yen, the Swiss franc, the euro, most, if not all, of its major peers. But take a look at gold, up again this morning on the trade uncertainty. So we're now at $5,155 an ounce. We keep an eye on all of these assets because for now, we don't have any trade in cash treasuries, given that Japan is on holiday. But that will open up at 7 a.m. London time. We'll take a look at treasuries then. On the front pages of the newspapers this morning, out of Spain, El País leads on this headline. Now, this translates to Brussels demands that the US comply with the trade agreement that Trump signed with the EU. This is Brussels asking for full clarity from Washington regarding where the Supreme Court ruling on Friday leaves the so-called Turnberry deal that was, of course, struck at Trump's golf course last summer. The Commission determined not to pay more than that 15% tariff that they agreed there. Turning over to the Financial Times now, they're carrying the story that Iran agreed a secret €500 million arms deal with Russia to acquire thousands of missiles. Now, we've got a former senior US official telling the paper that Russia would likely have viewed the deal as a way to rebuild ties with Iran after it conspicuously failed to come to Tehran's aid during the 12-day war with Israel. Finally, let's turn over to the Wall Street Journal. They've got this story out of Mexico, the military killing the country's most powerful drug kingpin, who, by the way, was a former police officer, and so therefore escalating this war against cartels, which, of course, comes against a backdrop of pressure from President Trump to curb narcotics trafficking. But you get a roundup of all these stories and everything you need to know to get your day going by looking at today's edition of Daybreak, which, of course, terminal subscribers can find by going to DAYB Go. Now, back to tariffs. In a swift reversal of fortunes, countries that had been hit hardest by US President Trump's tariffs have emerged as the biggest winners from the Supreme Court's decision to strike down his emergency levies. Let's bring in our Chief Asia correspondent, Ros Matheson, for more. Ros, how is the tariff ruling likely to impact the way that China and India approach trade talks with Washington now? Good morning.
Good morning. We can see India, for example, taking what you call a tactical pause. So they're not going to go ahead with their further conversations in the coming week with the US. But that's probably just to pause for a bit and see how this is all going to pan out in the days and weeks ahead. Of course, we've got this 150 days now in play. So they probably just want to let the dust settle a bit. But, do they want to renegotiate some of the terms? Maybe, but maybe not, because what's happened is actually seen as quite positive for India. That's why you're seeing Indian markets react today the way they are. Textile companies up, auto parts makers up. Analysts saying it's positive for chemical companies in India, the sense that they're now looking at a 15% baseline tariff, which would be quite positive for them. And again, levelling that playing field for India against other countries. When you look at the effective tariff rate, perhaps against Southeast Asia, India might even be lower than they were, than against Southeast Asian nations previously. So a sense really for India, this is quite positive. So just perhaps taking a pause in their conversations. For China, of course, also seen as positive, quite a muted response from China so far, but they'll probably be relishing the fact that Donald Trump has lost quite a lot of his leverage here. So he's about to come and meet with Xi Jinping, the president of China, and all those things that he tends to do when he's annoyed with China, which is to threaten radically higher tariffs on China, citing emergency factors. That's gone out the window for him. So he can't really come and insist that China keep buying more soybeans, for example, more planes, more energy. Does China intend turn say it's going to put conditions on continuing to send rare earths to the US? Are they going to use that leverage? For now, they're playing it pretty quiet, though, as well. And they will have a vested interest in having that visit go off pretty well. They do want a good meeting with Donald Trump. So perhaps they'll also play the long game there.
Yeah, conspicuously quiet response from China for now. But also, Ros, what's likely to be Europe's next move?
Well, interesting for Europe, of course, the US is saying it expects that countries, including the bloc of the EU, will stick to the trade deals they've negotiated. However, the head of the European Parliament's trade delegation says that he's going to push to freeze the ratification of the trade deal between the EU and the US. He's citing all this uncertainty. What does it mean for companies? What about customs? What happens to tariffs that are paid? What happens after 150 days? So again, wanting to slow that process down. Of course, you see the ECB President Christine Lagarde saying the same thing. It's critically important to have clarity on what's going to happen now with trade for countries and for companies alike. So, since perhaps they want to see what happens now, does the 15% not look so good now that other countries are going to be there also? So again, looking at other countries and blocs and the relative playing field, do they want to try and push their luck again with the US? So we'll have to see how much support that gets to freeze that process in the European Parliament. Of course, they've done it again recently when Donald Trump was threatening to take over Greenland. They froze the ratification process, not for too long, but there is a precedent there.
Rosalind Matheson there, our chief Asia correspondent. Thank you for bringing us the latest on trade. Well, turning to the market reaction now, the dollar and US futures sliding with gold gaining as this heightened uncertainty over US trade policy unsettles these markets. Joining me now for more is Muzinich co-head of public markets, Tatjana Greil Castro. Good morning, Tatjana. Thank you for making time for us. I wonder if you position for this tariff ruling to be net positive for the US economy. On the one hand, you've got potentially refunds coming in. That could be a boost to business whenever the refunds come. We've got a lower effective tariff rate, analysts are calculating. But then on the negative side, you've got all this continued trade uncertainty. Net, where does it leave the economy?
I think it leaves just uncertainty, as you just said, because it is very unclear now how those trade negotiations will continue. And as Ross just said also, there is a power play. So Trump has been very much into a power play mode for the first year. And that was, went all the way in when he announced his intentions on Greenland. This is really just showing, look, I can do it because I have the military might, and whatever I want, I can take. And so that was the same with the trade deal, where he said, look, we are the biggest economy. There's clearly a trade deficit, and therefore we can impose those tariffs on you or on us. And with this ruling now, that power is eroding. And I think with that, there's, you just highlighted all the trading partners are saying, where does that leave us? And it's not just in terms of where does it leave us with regards to new tariffs that may or may not come and how long they will last and what they look like. But it is also now clear, and with the midterm coming up and the likely change then in the houses, is that the power that Trump has had up until now is steadily eroding. And so there will be more uncertainty because we'll have to now see how everybody reacts and what can be imposed on top of that. Generally, I would say tariffs look lower. They look to be settling in lower than they were before. So in that regard, it's broadly probably a positive with regards to just sort of the monetary impact. But then we cannot forget that those tariffs have also been a huge source of revenues for the government. And so in that regard, it's not all rosy because, what somebody wins, somebody else will lose.
Yes, where does it leave your appetite for treasuries when you've got less tariff revenue?
So for us, treasuries, we still expect them to remain range bound. And that is because we do expect the Fed to continue cut interest rates later in the year. And it's also probably justified. It is above neutral. And so with that, that clearly the whole curve is likely to benefit some. But this continued steepening trade that the market has been talking about now for a very long time is likely to be on the cards. So we do see a bull steepening in the short end, but then the long end is a little bit trickier to ascertain. We don't think that there is likely to be a big sell-off in the long end, but it is probably more range-bound.
You take me to central banks. How much does the fact that ECB President Christine Lagarde hasn't been so fervent in her denials of the reports that she's going to leave the ECB early for political reasons, how much is that going to undermine her credibility? Could we see much of a euro impact in the longer term?
I don't think that it will have an impact on her credibility. She clearly is the spokesperson, more or less, for the ECB. And she has been very much. I don't think she was a strong leading force in the ECB during her tenure anyway. And that will just continue. She is just sort of communicating what the rest of the council has been deciding. And that will continue to be the case as long as she decides to stay.
If we can turn to geopolitics, I'm looking at Brent here, down more than 1% at $71 a barrel. We were discussing earlier the potential outcomes in Iran. How are you factoring in that geopolitical risk into your outlook?
Well, when you look at the 12-day war with Iran in the summer, oil prices spiked very briefly and then came down just as quickly. So assuming that this is not going to be a regime change, which is not really something that most people are really looking for because there's just too many uncertainties. And so to that extent, it can easily be that this is really sort of this escalate to de-escalate. And so you can see, and hopefully there will be some negotiations and some agreements to back off again. So we don't see the oil price that clearly has been edging up some over the last few weeks, that will significantly increase to have an impact on inflation.
Just finally, Tatjana, I want to talk about private credit. We've got a fantastic big take on Blue Owl's woes last week. I'm going to mix my animal metaphors here because we talked a lot about cockroaches in private credit last year. I'm wondering if the Blue Owl woes were the canary in the coal mine moment for private credit.
So private credit is such a big universe, and I think that is really something that most people don't really differentiate. So there will be some private credit deals that carry a high leverage, but then there is also private credit deals. And so, for instance, the private credit we do that we call parallel lending, where we invest alongside banks. Banks clearly have a limit in how much leverage they can lend. And so there are also pockets of private credit where leverage is very much subdued, and that is just because of regulatory sort of restrictions. So you'll have to see, there will be some deals where they'll probably have to be restructured, and then we'll have to see, it's not just the underwriting that those private credit companies have been doing, but then also how do you put that together into a portfolio? And so the risk sizing, so taking the right size of risk within a portfolio is clearly based on your underwriting skills and how much risk you want to take in an individual name, but then also how much risk do you put into a portfolio in aggregate. And I think that's really what we'll have to ascertain. And there will be good portfolio managers and well-structured portfolios and less well-structured portfolios. And so I think that's really the differentiation that the market will have to make. And so Blue Owl clearly in particular is one that grew by acquisitions and grew significantly. It's very difficult then to keep a certain culture in risk-taking in place. And so that's probably one of the reasons why Blue Owl is standing out as being the one that there's the most focus on.
OK, Tatjana, really appreciate you setting us up for what's going to be a busy week in these markets. Tatjana Greil Castro there, co-head of public markets over at Muzinich. We've got plenty more coming up for you. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to our top corporate stories this morning. The US Justice Department's investigation of Netflix's $72 billion offer for Warner Brothers is said to include scrutiny over the streaming giant's business practices. Sources say officials are looking into whether the deal may create a potential monopoly. It's the strongest signal yet that the Trump administration is going beyond a standard review. Any possible delay may benefit Paramount's rival bid. Elsewhere, Donald Trump has called on Netflix to fire Susan Rice from its board or pay the consequences. That's after she said on a podcast that Democrats would take action against corporations that take a knee to the president. The streaming giant is yet to respond to a request for comment. In other news this morning, NASA is preparing to remove its massive moon rocket from the launch pad to fix a technical issue, delaying its much-anticipated mission to send a crew of 4 astronauts around the moon. It says engineers have found an interruption in the flow of helium in the rocket. The agency had been aiming to launch the Artemis 2 mission on March the 6th, but now says it won't happen until April at the earliest. And the former US Commerce Secretary Gina Raimondo has welcomed the US Supreme Court's decision to strike down some of Donald Trump's tariffs. Speaking to Bloomberg shortly after the ruling on Friday, she said that the president's landmark economic policy has created a lot of uncertainty for businesses.
But I think the really important message of today is that the system of checks and balances in this country worked. And if anything, I think it makes America stronger. If anything, it gives us even more leverage in the world because it shows the world, it shows global businesses, our judiciary is independent, it enforces the laws. And, you know, you asked me in the beginning, what will Trump do? He seems to still want to go ahead with tariffs, but now he's going to have to do it in accordance with the law, which shows the world and our allies our systems are working, the judiciary is working, and we're a stronger country because of that.
Well, when it comes to China, you think about the stance of some of the other nations in the world. Mexico, for example, has already raised tariffs on China. A French government advisory panel just this month proposed tariffs on China, hikes coming from the EU. Do you see any room here for a coordinated move by the West against China when it comes to some of the overcapacity here? And do you think that that's something that you would advocate for?
It is certainly true that in order for the United States to effectively compete with China and their distorted trade practices, we're strongest when we work with our allies. I was in Munich last weekend at the security conference talking to a lot of Europeans. You know, when China subsidizes a particular product and then dumps that product into the global market, it doesn't just hurt America. It doesn't just hurt American workers, consumers, and farmers. It also can hurt Europeans and Mexicans and Canadians. And so it's definitely the case that we would be stronger working with our allies to combat the unfair, in many cases unlawful practices of the Chinese government.
And Gina, I also want to ask about what we're seeing on the domestic front when it comes to some of these multitude of companies that have filed suits against the government, basically trying to secure a refund for these tariffs. As of December, you are a board member of Costco. And I'm curious, when you think about the process ahead of us, what is the kind of timeline that you're thinking about? Certainly we saw from Justice Brett Kavanaugh today saying that this is going to be a very messy process. Is that your expectation as well?
It is. Look, it's hard to know. This came down a few hours ago. But one of my concerns about the whole way that the president has gone about these tariffs, apart from the fact that he overreached his presidential authority, is it's just created so much uncertainty, and today we have more uncertainty.
The former US Commerce Secretary Gina Raimondo speaking to Bloomberg's Katie Greifeld there. Let's check in on these markets as we approach the European cash open, starting with the cross-asset picture. We had seen Bitcoin dropping below 65k amid all of this tariff uncertainty. It's back above that level now. Gold, meanwhile, is up, a bright start to the week for precious metals, helped by the Iran uncertainty as well. And then we have gold dropping as traders weigh the outlook for that Iran nuclear agreement. Now, we don't have trading cash treasuries yet because Japan is on holiday, but just briefly looking at the futures picture, we're down on both sides of the Atlantic, gains in the Asian session, but the dollar finally firmly down against its major peers as traders digest all of this tariff uncertainty. Coming up, the risk events on the agenda for the week ahead and the charts to frame them. That's next. This is Bloomberg.
Tariff, tariff, tariff. I am a tariff man.
To me, the most beautiful word in the dictionary is tariff.
Build your plant in the United States and you don't have any tariffs.
We will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating.
The tariffs give us great power to negotiate. Always have.
And I really think we're helped a lot by the tariff situation that's going on. A lot of it's because of tariffs, because they're coming in because they don't want to pay tariffs.
We were able to make phenomenal deals. If we didn't have the tariffs, we wouldn't have been able to do this.
I think he likes tariffs. The US president extolling the virtues of tariffs over recent months. Well, we're going to be hearing from the president in his State of the Union address tomorrow. Let's take a look at the risk events on the agenda for the week. We have that address. Of course, economic policy expected to be central to this speech as we have so much frustration among the electorate about the cost of living. And he'll be addressing, of course, those members of Congress on whom he's going to rely to approve his new latest trade policy. It's also tomorrow the 4-year anniversary of the war in Ukraine. So will that come up in his speech, we ask as well. And then on Wednesday, we get the latest Nvidia earnings. So let's take a look at some charts to frame all of this for you. First of all, we have President Trump's approval ratings, which, as you can see, are at their lowest now of his second term. Flip the board over and we can frame the market reaction that we might see to those Nvidia earnings. Very, very difficult to impress this market at the moment, given all of the worries about the AI trade, but also the geopolitical and economic backdrop. And then flip the board one more time. And before all of this, we're going to get the latest German IFO data. So this should give us a read on whether that recovery in Germany is real. This is the main one that we take a look at to gauge the economic sentiment in Europe's biggest economy. On the subject of that, we've got plenty of interviews coming up for you later today. The opening trade is going to be speaking exclusively to the CEO of Orange and later the IFO president, as well as the CEO of Estée Lauder joining the Pulse. So Anna, Guy and Tom will take you all the way to the open. That's next. This is Bloomberg.